Hello, my name is Jamie Goggins, and in part two of this short series of talks, I'm going to explain briefly how to carry out a carbon footprint. We'll use the Greenhouse Gas Protocol corporate standards for this. We cover Scope 1, 2 and 3 emissions. We look at the traffic light report methodology that was briefly mentioned in part 1 of this talk series. Look at the data collection and different types of activity data, and introduce the greenhouse gas inventory template that we've developed at the University of Galway. Greenhouse Gas Protocol corporate standard is a widely used standard globally for assessing the carbon footprint of an organisation. It's divided into three scopes: Scope 1, Scope 2 and Scope 3. Scope 1 are the direct emissions from owned or controlled sources, such as heat and fuels, petrol or diesel for company vehicles and refrigeration leakage. Scope 2 emissions are indirect emissions from the generation of purchased energy, for example electricity. Scope 3 emissions are all indirect emissions that are not included in Scope 2 that occur in the value chain of reporting company, including both upstream and downstream emissions. Scope 3 has 15 categories, as we can see here on the screen, which attempt to cover all the possible sources of emissions outside of Scope 1 and Scope 2. However, according to the Greenhouse Gas Protocol, only Scope 1 and 2 are mandatory to report on, and accurately measuring Scope 3 emissions can present significant challenges. As a result, Scope 3 emissions are often omitted from greenhouse gas inventories. This is problematic, as Scope 3 measures impacts that occur along the entire supply chain of an organisation, which needs to be decarbonised for an organisation to achieve net zero emissions. When included in a greenhouse gas inventory, supply chain emissions usually make up the largest portion of emissions for a typical organisation. The traffic light carbon footprint method has been utilised by the University of Galway in order to gain a high level understanding of where the hotspots are within the university in terms of greenhouse gas emissions. The traffic light method encourages organisations to select the Scope 3 categories, which will likely have significant activity data associated with it. This varies depending on the type of organisation. This method also makes use of spend-based activity data. This means using company bills and expenditure reports as a way to quickly sum up the organisation's activities and operations where more detailed data is not yet available. The spend-based method is generally not as accurate way of calculating emissions, but is very effective at giving a traffic light overview of emission hotspots, which also make use of already compiled financial accounts. For the University of Galway, for example, the traffic light method meant the following categories were not included, as it was deemed that there will be little to no activity data, given the university is an education institution. So transport and distribution, leased assets, process use, end of life of sold products, franchises and investments. In order to calculate greenhouse gas emissions, the first step is to collect the organisation's activity data. So data under the various different scope categories, Scope 1 being the gas, the oil, the petrol, the diesel. So the units are usually litres or kilowatt hours of fuel. Scope 2 being electricity bill, for example, and the units usually being units of electricity or kilowatt hours of electricity. Scope 3, for example, the company expense report, so how much euro were spent on the different sectors. Scope 3.2 would be the commuting numbers, so surveys on the employees in terms of how they travel to and from work, what mode of travel they take, the distance that they travel, and so on. Scope 3.3, business travel reports. So we can do this either through euro spent on business travel or the distance travelled. Obviously, the mode of transport needs to be there as well to understand the emissions associated with business travel. Scope 3.4, waste and water report. So, and this is units in terms of the weight of the water, the weight of the waste, or the amount of water, the volume of water that's used. These data can be put together in the greenhouse gas inventory template that's developed by the University of Galway to capture all of this information. There are many calculators and tools available which will carry out the emission calculations for you once the data is compiled. However, there's different levels of accuracy associated with different types of data. So we can use average data, or supplier-specific data. There's two types of average data we can use. One is purchase data. So purchase data are known as spend-based method, where the spend-based method of carbon accounting takes the financial value of the purchased goods or services and translates it into emissions with a corresponding spend-based emissions factor. So factor, or the emissions factor, is a factor used to convert the financial value of the purchased goods or services into greenhouse gas emissions data. The second type of average data would be to use distance, weight, or volume, and this is known as activity-based method. So activity data is a quantitative measure of a level of activity that results in greenhouse gas emissions. For example, liters of fuel consumed or kilograms of materials purchased. An emissions factor is a factor that converts that activity data into greenhouse gas emissions data. So for example, kilograms of CO2 emitted per litre of fuel consumed, or kilograms of CO2 emitted per kilogram of materials produced. There's also supplier-specific emissions factors, and that's if a company has its own carbon footprint, then you can get that carbon footprint divided by the revenue of the company and use the emissions factor. Better again is to use product-specific life cycle assessment data. So that could give you a full cradle-to-grave picture for the activity, which would be best practice. So for example, the EPD Ireland programme publishes the environmental product declarations for construction products and materials in Ireland. But we can use a hybrid of different approaches in there. So a hybrid approach was basically you start with the low-hanging fruit. So you start to identify opportunities for swapping the spin-based emissions for activity-based calculations until the whole supply chain is accurately understood. So the spin-based method is the most fastest and easiest way to do it. But as I say, it's the least accurate. So that's why we can use the hybrid, where we start with the spin-based method, and then as we get more accurate information in there, or if more accurate information is available through activity-based calculations, we can substitute that within the calculations. Often useful to use greenhouse gas inventory templates when calculating the emissions associated with Scope 1 and 2. For those students undertaking the degree at the University of Galway, up on Canvas you'll find the University of Galway greenhouse gas inventory template for use. Within the spreadsheet, it's populated with emission factors. These emission factors are either specific to Ireland or adopted from the UK government's database with the Irish factors one available. The template has emission factors going back at least 10 years from 2022 for each category of emissions. Emissions are automatically calculated and totaled once activity data is input. There are tabs on the greenhouse gas inventory template for each category of emissions. Within the University of Galway greenhouse gas inventory template, there's also ability to calculate the emissions associated with Scope 3. The template contains the following Scope 3 categories: business travel, waste and water, commuting, purchased goods and services, and capital goods. In terms of collecting the activity data, business, travel, waste and water are relatively straightforward. So you can see on the top left there of the screen, we collect the business travel in either kilometres travelled or euro spent. And then within that, there's an emissions factor built into the spreadsheet. So we can basically multiply by the activity data, either in kilometres or euro, multiply by the emissions factor to give the emissions. So for example, a short haul flight is given in kilometres, and there's an emissions factor associated with each kilometre of flight taken to give the overall emissions associated with those flights. In terms of the waste, we need to know the amount of waste in tonnes split down there, as you can see in the table in the middle of the screen there. Usually that data is relatively easy to get within a company because we track the waste from the waste service company. In terms of commuting, that requires gathered information for employees. So on the bottom left hand side you'll see an example there where we collect data from an employee. So how many days a week are they working, the number of weeks in a year. the distance travelled in kilometres each day, and then double the distance because they need to go to and from the place of work. And from that, you can work out the distance by the date, by the weeks, to get a kilometre per year travelled commuting to and from work. So we need to understand how they commute, the method of commuting. So from the drop-down menu, we can pick that. And then there's an emissions factor associated with each mode of travel. Then the spreadsheet automatically calculates the emissions for that employee for that mode of travel and that distance travelled in the year. For purchase goods and services, that requires expenditure data to be categorized into industry categories, such as construction work. The database, the University of Galway Greenhouse Gas Inventory template uses the XEI base 3 emissions factors to convert the euro spend in each category into associated emissions.